Welcome. In this video, did Onyxcoin set up a bullish pattern? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the chart, we can see that the price has been rising strongly for a certain period of time, and then it has entered a narrowing structure, forming a pennant pattern, which is one of the most well-known and reliable patterns in technical analysis. Such patterns are among those that signal with high probability that the trend will continue. The fact that the price formed this pattern suggests that the uptrend has only entered a correction period and that the upward movement may continue with a new momentum in the near term. Pennant patterns occur when prices briefly consolidate in a horizontal or slightly downward narrowing channel, especially after sudden and strong rises. This consolidation period is usually short-lived and can be considered as the breathing phase needed to prepare the infrastructure for a healthier rally. The contraction in this process is shaped by the realization of profits by buyers, as well as the gradual entry of new buyers. The narrowing of the pennant structure often becomes more clearly evident as volume declines. This provides a very reliable visual clue for technical analysis. In the current situation, the price action approaching the upper line of the pennant pattern indicates that a potential breakout is on the verge. If this breakout occurs, according to the rules of technical analysis, the price is expected to move upwards for a distance equal to the first bullish wave. In other words, the target of this pattern would be the length of the pole that preceded the pennant formation, offering traders a very satisfying bullish potential. In particular, such bullish moves are often supported by increased volume, which increases the reliability of the breakout. When the price moves close to the upper band of the pennant pattern, it indicates that the market psychology is gradually shaping in a positive direction. It could be a phase where sellers are starting to lose their strength and buyers are gradually gaining weight. This suggests that an upside breakout is not only supported technically, but also psychologically. Buyers do not hesitate to increase their positions on the breakout of such patterns. This is because it is a sign of strong confidence in the market. Also, in scenarios where the pennant patterns break out to the upside, the move is often quite sharp and fast. This is mainly because the tight structure of the pattern is resolved by a sudden breakout. As soon as the price makes a move to the upside, many traders enter positions, which leads to increased liquidity. This move, combined with high volume, can trigger a strong uptrend. If this process is accompanied by other indicators, such as the RSI, moving towards the overbought zone, this could signal a further strengthening of the uptrend. For traders, such patterns offer valuable opportunities, because it is easier to establish a clear technical structure, clear targets, and a specific stop-loss strategy. Since the breakout direction and target distance of the pennant pattern are specific, trading decisions can be made on a more rational basis. This is a great advantage in terms of risk management. Especially professional traders and algorithmic systems can detect such patterns and accelerate the upward movement of the market with automatic buy orders. An upward breakout of the pattern means a bullish confirmation in terms of technical analysis. Such confirmations boost investor confidence and attract a wider investor base to the market. This is why pennant breakouts are often the beginning of not only a technical, but also a psychological bounce. As market participants see such breakouts as an opportunity, buying accelerates, creating a new momentum that supports the price. In this favorable scenario, it is quite possible that the price will reach its upside targets. But we can't decide the analysis only by the pattern. Let's look at the other metrics. Stay tuned. A careful examination of the chart shows that the current price movement is about to complete the second wave structure within the framework of the Elliott wave theory, and is preparing to enter the third wave process. The Elliott wave theory is a powerful and time-tested method of analysis in financial markets. According to this theory, prices move in a five-wave structure within the framework of psychological cycles. Among these, the third wave in particular is considered to be one of the longest and most powerful. Therefore, the fact that the second wave is about to be completed, or has already been completed in the current situation, may signal the beginning of a significant bullish wave in the market. The second wave is usually of a corrective nature and is seen as a short-term respite after the first wave. This correction is sometimes completed with horizontal, zigzag, or triangular patterns. However, whatever form this correction takes, the transition to the third wave is of great importance for investors, because the third wave is considered the strongest and fastest moving part of the trend. For this reason, price movements after the second wave give us strong clues about how far the uptrend can go. According to the Elliott wave theory, when the third wave begins, the target levels determined by Fibonacci projection measurements are of great technical importance. In this context, the minimum level that the third wave should reach is expected to be around 1/618. This is the golden ratio of the Fibonacci sequence, and it is quite common to test this level, especially in wave structures. If the market has an even stronger momentum and investor confidence continues to grow, then the third wave may advance to higher Fibonacci projection levels, such as 272. On the current chart, the potential for upside momentum to increase is extremely high as prices complete the second wave correction. The technical environment is very favorable, especially for the beginning of a strong and dynamic structure like the third wave. When this wave begins, not only the price momentum, but also the trading volume is expected to increase significantly. This is because traders often follow such technical patterns and see strong moves such as the start of a third wave as an opportunity. This shows that bullishness is not only a technical necessity, but also supported by trader behavior in the market. Strong and consecutive green candles are often observed during the third wave. During this period, prices often surpass previous highs in a short period of time, and psychological resistance levels are crossed one after another. Factors such as renewed investor confidence, new fund inflows, institutional buying, and positive news flow are among the factors that support this process. In technical terms, stop-loss levels can be clearly determined in such scenarios, while profit targets can be planned in line with Fibonacci ratios. Therefore, third waves offer investors valuable opportunities in terms of both risk and return management. If the current price action is positioned at the end of the second wave and upward movement has begun, it is reasonable to assume that this process will evolve into the third wave. In this context, the Fibonacci ratio of 1/618 should be considered as target levels. This level is the natural target of the third wave. However, if the uptrend gains momentum, the broader projection of 272 levels is also among the technically possible targets. From a technical analysis perspective, the RSI indicator shows a very noticeable uptrend structure. This structure gives us very meaningful information about the general direction of the market and provides strong signals about how price movements may shape up in the future. RSI is one of the most widely used momentum indicators by traders and is particularly effective in analyzing trend direction, strength, and possible turning points. The rising trend line currently forming on the chart shows that the RSI reflects the steadily increasing buying pressure in the recent period. The RSI appears to be approaching this uptrend, and a pullback towards this line is expected. Such pullbacks are quite healthy and normal movements in the markets. Because no price movement goes up or down all the time, there are occasional periods of respite and regrouping. The RSI's approach towards this uptrend can be interpreted as the indicator's process of touching the support line to regain momentum. If the RSI reaches this uptrend and makes an upward bounce from this point, this could be a strong indication that the market is about to start buying again. Let's pay attention to this trend in RSI. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.